since Trump's re-election, where its market share has more than tripled. During the same period, Ethereum has lost over one-third of its market share. One reason for this shift is the regulatory landscape. Trump has positioned the U.S. as a potential global leader in crypto, appointing pro-crypto regulators and pledging support for the industry. XRP, which has strong enterprise use cases, has benefited from this environment, especially after Ripple announced an institutional DeFi roadmap earlier this year. Ethereum, on the other hand, has faced challenges. Competition from other blockchains, particularly Solana, has intensified. I still believe in Ethereum and its long-term potential. Ethereum and XRP serve different purposes, with Ethereum continuing to be the dominant smart contract platform while XRP focuses on enterprise solutions and payments. Both have strong use cases and should do well in the long run. However, given XRP's current momentum and market conditions, there is a possibility that XRP could surpass Ethereum, at least temporarily, in terms of market capitalization. Ethereum is set for an exciting update known as the Petra upgrade, which combines the best features from two earlier updates, Prague and Electra. This upgrade is all about making Ethereum faster, more secure, and easier to use. A significant change with this upgrade is the increase in the amount of Ethereum that validators, people who help keep the Ethereum network running, can hold. This change means that more Ethereum can be used in the network's operation, potentially making it stronger and more efficient. Turning to Bitcoin, the market is experiencing what analysts call a shakeout rather than the end of its 4-year cycle. Bitcoin's price is down over 1/5 from its record high set earlier this year, which coincided with Trump's inauguration. Despite investor sentiment reaching extreme fear levels multiple times, historical patterns suggest this downturn could be temporary. Some analysts argue that key technical indicators have turned bearish, raising concerns about the cycle ending prematurely. However, Bitcoin's 4-year cycle has historically shaped price movements, and corrections during bull cycles are not uncommon. Institutional investment has played a key role in Bitcoin's current trajectory. The recent launch of U.S. spot Bitcoin exchange-traded funds saw cumulative holdings briefly exceed $125 billion. Analysts suggest that the conventional cycle structure may be evolving due to increased institutional participation. Bitcoin recently saw a daily close above $84,000 for the first time in over a week, signaling possible support at this level. However, analysts warn that Bitcoin's price is closely tied to traditional financial markets. If equity markets decline, Bitcoin may also see further downside. Some analysts point to a key support range between $72,000 and $73,000, but emphasize that broader macroeconomic trends will influence Bitcoin's next move. Meanwhile, regulatory developments continue to shape the crypto landscape. The U.S. Securities and Exchange Commission has delayed its decision on multiple cryptocurrency exchange-traded funds, including those for XRP, Solana, Litecoin, and Dogecoin. The SEC cited the need for more time to evaluate proposed rule changes. Among the affected filings are Grayscale's XRP ETF and Cboe BZX exchanges, Spot Solana ETF. Decisions on these applications have been pushed to May. Internationally, cryptocurrency is playing a growing role in trade, particularly in Russia. Reports indicate that Russian companies are using Bitcoin and stablecoins for transactions with China and India amid ongoing international sanctions. Sources suggest that Russian oil companies are conducting large transactions using digital assets, with some firms reportedly handling tens of millions of dollars in crypto trades each month. These developments highlight the increasing use of cryptocurrencies as an alternative to traditional financial systems in global trade. That wraps up today's crypto update. XRP is testing a historically significant resistance level, with potential for major movement if past trends hold. Ethereum faces increasing competition, while Bitcoin's recent dip may be part of a broader cycle rather than the start of a prolonged downturn. Regulatory decisions and international trade developments continue to influence market trends. So there's a lot going on in the world of cryptocurrency and stocks. One of the biggest things out there is the conspiracy or theory that Trump could be possibly crashing the market on purpose. There's a lot of people out there saying that he's doing so. Now, there's a lot of interesting evidence out there that could mean that he's doing it, right? If we go back to February, we had one of the lowest months in inflation over the past few months with 2.8%. Now, remember, 2 years ago, we were at 10, 11% in inflation. Now, this is a pretty big deal, is that inflation's dropping. We're down at almost, yearly, over a year, we're at the lowest inflation rate that we've had in years. So a lot of people are saying he's intentionally crashed the market. Now, I'm not going to get into that. I don't know if he is or not. But I want to talk about, the idea that maybe he could be. Now, I'm not going to take a position on this. I don't know if he is or he's not. But it is interesting, this theory, and this is what could be happening in crypto and stocks, right? Is that there's been huge market declines. The crypto market has been down up to 30%. Stocks have been down up to 20%. The global stock market values have dropped by approximately $5 trillion, primarily affecting U.S. markets and major tech companies. A lot of people are saying that Warren Buffett is actually saying behind closed doors that Trump is doing some moves that he thinks are genius. Now, I don't know if that's true or not. That's speculation. Recent reports indicate that Buffett has been selling his stock, so I don't know how true that is. Federal have maintained, the interest rates have maintained, and they haven't been influenced by what's happening over the world or what's happening in stocks or crypto. Now, it is interesting this could be happening, right? As we understand what the Fed does, right? I want to explain that to you. What the Fed does is that put a flow of money in and out of the economy. Now, the reason why they do that is because more money creates more economic stimulus. Less money makes less economic stimulus. So a lot of people are saying, why not just free flow the money into the economy all the time? Well, you can't do that either, because if you do that, it's like running an engine too hot. Eventually it burns out. So you have to control money in, control money out, and keep it running at a constant warm temperature. You can't get it too hot. You can't get it too cold. Now, think about the Fed as like a water faucet, right? Is that when they want to add more money to the economy, they turn that faucet on, more money flows out. Now, when they want to slow it down, they shut it down a little bit, let money flow into the economy, slows it down a little bit. Now, the reason why they do this, like we said, is to control economic growth and sometimes slow down or either speed up the economy. Now, the way they do this is through the interest rate. Now, a lot of people know interest rates in relation to mortgages, but they don't realize that they affect a lot more other things. They affect how businesses borrow money. They affect how individuals borrow money. They affect if people are more aggressive or less aggressive with investments. So what the Fed does is they say, look, the economy's too hot. So what we're going to do is we're going to raise the interest rates, because the way the economy works is that if somebody says, I want to borrow $1 million to start a business, and they look at the interest rate and say, well, it's only 2% right now. That's a great deal. I'm going to make at least 10%, 20% on the business so that the margins are high, so I'm going to take as much money as I possibly can. That makes sense in that environment. Now, once the interest rates start going up, the same business loan may be 12, 13, 14%. Now, the average business service or product makes about 20% ROI. So if you're looking at that, you're like, well, it's 12, 13, 14% to borrow this money. I'm only going to make 20% back on it. The margins are too low. You're less likely to borrow money. Therefore, there's less likely economic growth, less likely to be economic stimulants. People start pulling back. It propagates through the economy. Other people start saying, well, there's not a lot of money. They stop spending at the malls. They stop spending at the grocery stores. The economy starts to slow down. Now, that causes inflation to start getting in check, dropping from those historically high values. Now, after that happens and everything calms down, the Fed says, well, now it's time to turn the faucet back on. We don't want it to get too slow. So let's lower the interest rate so people are more apt to borrow money for houses, for cars, for businesses, for investments. And then we start lowering that interest rate. Now, the interest rate, the inflation is low right now. So some people are saying that Trump is attempting to put economic hurt on the United States, because the Fed does have a meeting in May, and the Fed will be more likely to drop those interest rates, because if the interest rates are lower, then the economy grows, Trump looks good as president, and then he can have a case to lower them further and further into the future. Now, if we look back at his last presidency, he got those rates to near zero by pressuring the Fed in different ways. So he does have a history of pressuring the Fed to get the rates down to almost zero. Trump is a businessman, so of course he likes those rates down to zero. They help his rich friends out. They help a lot of business people. They help a lot of billionaires, but they also help the small man. So I believe that there's a good chance he could be doing this, but I'm not going to sit and say he is or not. I don't know. But it's an interesting theory, and I think you'd be a fool not to at least contemplate it, because if it's true, that means that this economic pain is only short term. Now, if it's short term, that means there's going to be a huge upside on the other side of this, like we saw in COVID. We saw that everything got crushed in COVID early on. Stock got to historically low values. They fell faster than they have that I can remember, especially crypto. And I was able to buy the lowest Bitcoin I bought in years was during COVID. I got it at 3,500. I bought 3. Still got them today. So that was, I made a bunch of money like that. So if it's true what Trump is doing, I'm not going to say it's true or not, but if it's true, or if it may be true, we're going to see crypto and stocks both come out of these ruts in sometime this summer. Now, if that's true, that means that we should be buying up everything that's more or less unfairly caught up in this hurt cycle. That means stocks like Nvidia, Palantir, Bitcoin, Ethereum, XRP, Solana, Cardano, a lot of these coins, tokens, stocks are unfairly being brought down, because if Trump's doing what they think he's doing, then it's not real. If it's not real, there's something artificial pushing this market down. If that's true, that means that everything will rebound back to the original or natural prices that they were before. That's a great opportunity for a lot of people. So it's interesting, right? I'm not saying it's true, but it's an interesting theory, and you'd be a fool not to at least contemplate it. If you're just joining the channel, please subscribe to the channel. We got a lot of people in here, but not a lot of likes. Please like the video. I appreciate each and every one of you. If you like this content, drop a super chat. Helps keep this beautiful studio, Evotion Studios in Clearwater, Florida, going. And it shows appreciation in me. Now, I don't sell high-ticket courses. I don't sell mentorships. Don't do any of that. I'm just here trying to help, and I would appreciate those super chats. So, same thing I want to talk about is a lot of people ask me to explain crypto wallets. So I'm going to explain crypto wallets today, because that's something I think is very important. If this is all true with Trump, if we're going to see historically high prices in Bitcoin, Ethereum, XRP, there's got to be a safe way to store your money. Now, there's a ridiculous amount of people who lose their crypto during Bitcoin runs. And they do it for either misunderstanding how wallets work, or they get scammed, or it's just outright greed. Now, there's a scam going around. Be careful with this scam, is that people are going around telling you that if you have XRP, you can claim your Flare token or some other token. And you do this by connecting your wallet to some other wallet, and then you receive your airdrop. And when you connect that wallet, they take everything you got. You have to be careful. There's no such thing as a free lunch. That's an economic concept, that nobody gives you anything for free. There's always a catch. And if it's not a catch to you directly, it's a catch to somebody else. Like, for example, I come into your house, I give your child a free PlayStation. Really, I'm trying to influence the father, because the father has a business and I want a government contract with him. That's the concept of no such thing as a free lunch. Nobody gives you anything for free. It's always with a purpose, and it's an economic principle. That means that it can't happen. Everything given free has some kind of motive behind it. Now, the motive may not be to you, may not be to your family. It may be to gain favor, like people giving out turkeys at Thanksgiving. Well, they do that to be, sometimes they do it to give back. Sometimes they do it for a tax write-off. Sometimes they do it but they're not doing it just to give it to you for free. It's always something coming back in the person in return. So be careful with that. Nobody's going to come and trade your crypto for you. Nobody's going to come and make you $1 million and only take 10%. That doesn't happen. It never happens. Never. Nobody's going to. Now, somebody may do it for, like a hedge fund may be making like 10, 20% a year. And yeah, you could get them and they'll take 2%. That's a lot. That's different than somebody saying they're going to make 10 times your money and only take 10% because I'm such a nice guy. People don't do that, because they wouldn't need your money at all. And I'm going to say one analogy before we get into these cryptos. If a person could make 10 times their money whenever they want it, they could just take your wallet, make 10 times money, and give it back. Now, I'm going to show you how easy it'd be for that person to be a billionaire. They could start with $1,000. The first day, let's say they could do it in a week. First week, they got 10,000. Second week, they reinvest. Now they got 100,000. The third week, they got 1 million. Fourth week, they got 10 million. Fifth week, they got 100 million. 6 weeks, they're at $1 billion in 6 weeks from $1,000. Now, why do they need your money at all? They don't need it at all. They need it because they're going to steal it. That's why they need the money. So crypto wallets are very important. A lot of people are saying, how do they work and what they really, a lot of people don't even know what they are because a lot of you guys are new. A lot of you guys are advanced, but I just want to go over it because it's very important how you store your crypto. Now, we saw with FTX back in 2021, I believe FTX failed. A lot of exchanges and a lot of projects got caught up in the FTX crash. So a lot of people who had their money on FTX lost it all, or most of it, because what happened with FTX is, let's say you had $10,000 worth of Bitcoin on FTX at the crash. Let's say because remember Bitcoin was declining at that time. So let's say you had 10,000. Let's say you had $10,000. Let's say you had one Bitcoin. Let's just say one Bitcoin. That makes it easier to explain. You had one Bitcoin. So that Bitcoin was worth at the time 50,000. But then shortly after, FTX crashed. Then when they went into bankruptcy, the Bitcoin was now worth 20,000. At that time, they locked in that value. You're getting $20,000 back. So over the next few years, Bitcoin went from 20 to 30 to 50 to now where it's at 80-something thousand. And now FTX is starting to give the money back. They don't give you a Bitcoin back. They give you back the 20,000 and what it was at the time that you lost it. So people have lost 60, 70, 80% of their money because they didn't properly secure their cryptocurrency. So it's a saying in crypto, especially old timers like me, is that if you don't own, not your keys, not your crypto. And that's something that I live by, right? Is that in crypto, owning and controlling your assets is everything. It's a concept called being your own bank. Can't be your own bank if somebody else has it. Exchanges are convenient if you're trading meme coins, if you're getting in and out of stuff, you day trade, that makes sense. But if you're long-term trading, planning to hold these things for months or years, it's best to get it off the exchange. Because if you don't get it off, it's theirs. It's not yours, it's theirs. That's why understanding crypto wallets is key to protecting your investment. Now, if you're new to this, wallets, private keys, public keys, seed phrases, gas fee, all that sounds crazy. It's a lot. But by the end, I promise you have a clear understanding of how wallets work. So let's talk about a crypto wallet. Let's break it down. All a crypto wallet is an app or a device that allows you to access and control your crypto. Now, think of it as a safe. Think of blockchain as a safe, right? Remember, crypto, when you have a crypto wallet, an app or whatever, there's no crypto in that app. There's no crypto in Coinbase. All you have is your key to access the crypto. The crypto always, in a way, lives on the blockchain. It never comes off the blockchain. You don't download your crypto to a wallet. All the exchanges happen on that blockchain. Now, what's in the wallet is your keys to that particular access to that particular crypto. Bitcoin's never in my wallet. It's never on a hardware device. It's never any of those places. It's on the blockchain. But what's on those devices are the keys that allows me access to send and access my cryptocurrency and send it if I wish. So think about it like a key to a safe that's in your wallet. The blockchain is the safe. So the key allows you to open and access your crypto. The crypto never is inside your wallet. It's recorded on the blockchain. And what you have in your wallet is just a tool that allows you to see it, send it, and receive it. Now, there's two types of crypto wallets. There's the hot wallet. It's like an online banking app, connected to the internet, easy to use, but can be hacked. MetaMask, Trust Wallet, they're all hot wallets. Now, what makes a hot wallet convenient is that it's on the internet. I could be at my cousin's house in Tennessee. I could be in Puerto Rico. I could use my phone. I could go to anywhere and I could access my cryptocurrency. But the problem with that is that if you can access it anywhere, hackers can also access it anywhere. They have ingenious methods of tricking you into giving it up. I've seen some crazy stuff. So you have to be careful. And then there's another one out there, right? Hot wallets are a little bit insecure, but they're also convenient. So, and you have cold wallets. It's like a USB drive for your crypto. It keeps the access offline. It's super secure, but it's less convenient. Examples are Ledger and Trezor. The most important rule is that if you lose your private key, which is stored in your wallet, you lose your crypto. It's gone. So it's very important to take care of these things. Crypto is still very immature. So that means that you have to have a little bit of technical understanding to be able to use crypto. Now, I want to compare it with the internet. Because people say, why is it so hard? Nobody's going to do all this. It's too hard. Yeah, if you go back to 1989, the internet was ridiculously complicated. You had to take a phone. Remember the phone that looks like a U? Had to put it on a modem. You had to remember that? If you're old enough like me, you remember that AOL and stuff, the modem connected. Put the phone on there. Remember, this is before the World Wide Web in 1992. That means that you could only go to news groups and download not even HTML, just text. So you would have to download the text. It would take a ridiculously long time. In order to go to these websites, you had to put the IP address in. There was no DNS. So you had to understand how all of this worked just to be able to access the internet. Now, in 1992, the World Wide Web came out, make it a lot easier. That's DNS service. It means you put in google.com, you go right to it. No longer have to know the IP address. You can now get what's called hypertext transfer back, hypertext transfer protocol back. You can get HTML back. The HTML translate, that code that comes back translates into graphics on your screen. So now I can get a web page with images all formatted, so all formatted correctly. So that made the internet ridiculously easier. Then you had Netscape Navigator. The browsers started coming. Now the browsers would take that code and translate it so it would be nice to look at, like you're reading a magazine. That's what transformed the internet. Before that, it was hard. But if you invested in the internet before that, that's when you made all your money. In the early days, in the early, mid-90s, late 90s, that's when you made all your money. Now, if you invested in it once it was okay and easy to use, you didn't make nothing no more. So it's best to get in when things are difficult. So like I said, a crypto wallet is just a key to your crypto. It helps you keep it safe. Now, crypto wallets matter because crypto, like we said before, is not physical. It does not exist in a specific place. Your Bitcoin, Ethereum, Solana don't live inside your wallet. Again, they live on the blockchain. They live on the blockchain. So with that being said, hope you guys have a great day. I appreciate you and see you on Wednesday.